We've done a lot with our portfolio since we last updated you guys. First, I'm going to go over the reasoning for what I've done with my portfolio. If you don't know, I am now mega short the market. For the past, let's say 6-7 months, I've been pretty short, mainly puts on the Nasdaq. The reason why was because everything that was going into making the stock market up, from my opinion, which was new dollars being created through stimulus, quantitative easing. Dollars aren't really created in that process, but a lot of kind of psychological impacts, interest rates coming down, that a lot of Fed policy, and the economy was actually heating up quite a bit just because of all the pent up demand from the lockdowns and kind of everything else going on. So I was long the market for a while. Then I started to get short, and mainly through Nasdaq puts. Over the past few weeks, I thought that trade got kind of overran, so I sold off pretty much everything, left a little bit on the table. I still have a little bit of that position, but these past few weeks, what we were talking about for a while was a relief rally potential, and I think that's what we've seen. I mean, we've seen a lot of these shorts getting taken out their positions. We've seen the market up pretty substantially over the past few weeks, as well as a lot of these zombie companies that don't make money. They've gone up substantially. A few of them that have gone mega short, where they were up like 30-40% from the lows, and they don't make any money. And I think the time for companies that don't make money is over. Why? Because we're going into a time of increased interest rates, as well as a lot of other economic worryfuls. So Justin, before we go into exactly what we did with our portfolio, why don't we kind of talk about what you did?
I'm not short anything right now. I have started slowly building up an OPEX.
Thank the Lord. Yeah. I didn't. Thank the Lords.
Yeah. So I have started slowly building up an OPEX position. When we're filming this on Friday, today was OPEX suggesting that if there is any fallout from OPEX, it'll be Monday, Tuesday, maybe Wednesday of next week. Although who knows, right? They might have found some exemption from, it being the third phase of the fourth moon of the sixth, whatever. You know how the game's played. Anyways, playing that front. Long term, I'm still in the long term. I would still remain in metals for the most part. And when I say metals, I've got some speculative silver miners that I've tracked down going to the various conventions and whatnot. A few royalty companies, but that's pretty much it. Whatever volatility plays I've got for OPEX, and then kind of like the I guess you just call it.
That's just to clarify.
So it's a GME and Upstart. GME and Upstart are two. Upstart looks interesting from that. I mean, I would say I hate saying this because I do not know much on my own beyond just saying, well, I listen to Pi-Fi stream and looking at that, and from the little that I can understand, it seems like there might be some potential there. So, but as far as Upstart goes, it's one of those things where if I don't really see much confirmation of a run this coming, when I say this coming week, let's say by Wednesday at the close of market, I will probably be out of my Upstart position. So it either will run or it will not run.
Because Wednesday, that's when the OPEX positioning is kind of closed. You can no longer cover.
Yeah, and you also have the holiday on Thursday being Thanksgiving, so there's also that thing too. But yeah.
Yeah, so why am I now going mega short? Is it because I think the market's going to roll over right away? Not exactly. In fact, the last video that we did, I talked about opening my first tranche of shorts. At first, I just wanted to kind of dip my toes in the water to see where we were going as the market kind of continued to progress. So I put my first tranche on. Since then, I've put on another, like, let's say if I had four tranches, I'd probably put on 2.5, 3. I would like to increase my position size just because of how bearish I am. And the reason for that is, let's just look at the bond market. If you don't know, I do a lot of videos with George Gammon, and we've been talking about this nonstop. So the 10-year right now is at 3.8%. I know what you guys are saying. What the heck? When did the 10-year get so low? But let's look at the 1 month. Currently, the 1 month is also at 3.8%, and the 10-year is currently below. It's still inverted, but it was much worse. And then if you look at interest on reserves, right now the 10-year is below interest on reserves, and for the past week it has been below. The 10-year has been below the yield that you get on RRP. RRP is the literal floor for interest rates, and the 10 years out into the future, you have a lower interest rate. The only rational reason for that is that there is some sort of ulterior need for tenure, aka collateral and other makeshift financial engineering that these banks can do, or financial institutions, as well as speculating that the inflation rate is going to come down substantially. If the market is willing to bet these extreme premiums that the 10-year is going to come down, aka the Fed has to step in and cut rates, or for the reasons that there's most likely some sort of financial collapse, the market is betting on this big time. So I'm just going to kind of follow the bond market and take the same play with these puts. I have quite a few zombie companies, then as well as just the index. So I'm short the Nasdaq, and then a few zombie companies like there's a few EV companies that are up huge on like just dumb news, and they haven't even sold a car yet. So I'm taking a pretty big position. One of these companies, they've yet to sell a single car. In fact, they haven't even made a car, but they had like a $50 billion market cap. So I was like, all right, I mean, this is just shows that we're still in this kind of speculative mania. If a car company that's yet to sell a car as just a ridiculous market cap. So that's kind of what I'm doing. And the reason why I'm pulling that trigger now is because the barn market is signaling. That does not mean the market's going to go straight down, though. I would love to see the market go up like 2-3 more weeks, and then I would be just mega short. Anything to say on that, Justin?
Nope. I think you said it all. I mean, you touched on the inversion, you touched on RRP. So yeah.
Yeah, there's no good, and just look at the economic state that we are in. It is getting worse and worse. Every single economic data that you can see is pointing that the economy is getting worse. Stealing is getting much higher. Profits on companies is going down. There is nothing good going on in the economy, and I only think that it's going to get worse. And I'm very pessimistic short term on the U.S. Just by short term, I mean the next few years, as it just seems like nobody is prepared for what could potentially be happening. I'm, in my personal life, pretty nervous and trying to prepare for an economic, not even a recession, but potential depression. And the reason why I'm prepared is because if you don't know, I run a semi-successful business. It's not, I wouldn't even call it a business, more of a side hustle, but I do have quite a few employees. And I don't know how much I want to try and grow this business. Like the reason for is, the more people I hire to try and grow the business to the highest capacity, the higher risk I have is if we go into extreme depression. So right now I'm trying to cut cost as much as possible, as well as trying to increase margins to where I have a much more higher lenient standpoint, to where if we go into this depression and there's much less demand for my work and the amount that can be paid for my work goes down, I can still be in a position there where the business can survive. Justin, what about real estate?
Oh, no, pretty much for real estate, what we're on right now is I want to see prices. I want to see sellers capitulate, and I don't think sellers have begun to capitulate yet. I will look to re-enter the real estate market when ideally the following two things happen. Prices have gone down, cap rates have gone up from the real estate side, and interest rates are down. That would be very attractive. As it stands right now, buying property at a high price and high interest rates, it's hard to win. It's hard to win.
All right, guys, that's kind of what we've done with our portfolio. What have you guys done? Let us know in the comments. And if you've been following this crypto, I mean, just look at crypto, for heaven's sake. If these cryptos collapsing, literally like every single day, a new crypto is just getting fucking wiped off the face of the planet. If you don't think that's going to happen in the stock market at some point, you are lying to yourself. Everything's intertwined. And the leverage that was in the crypto market is the same thing that is in the stock market. And people always ask about GME. The only time I would re-enter a position is during a liquidity crisis. Once we start to see something like that, that's when I'll start to speculate and jump back in. I've gotten fried on OPEX too many times. Not going to do it again. Justin's going back for his full time.
Thank you, Josh.
Justin's going to owe me a good dinner after this, because I'm sitting out and letting Justin and his greedy capitalistness take all the profits this time. Because if you don't know, the only way someone can profit is if the other person is not positioned. So, yeah. Justin, you're welcome in advance. I expect some sort of compensation for your wins. So
we'll get your head shaved. We'll get your head shaved. That'll be enough. So, take care.